Welcome. My name is Van Richards. I'm a chartered financial consultant, and I'm here today to talk to you about how to plan to retire without running out of money. And one of the ways that we do that is by teaching you about stocks. Usually, every day, what I'll do is I'll take a couple of different stocks and we'll talk about the earnings, the competitiveness, and the stability of those stocks in itself. We're going to take a little bit of a different turn today, and we're really going to focus in on a couple of stocks that are in the news today and yesterday that are talking about an acquisition, merger, however you want to refer to it. And that is Xilinx and AMD. It's really interesting how these two companies will work possibly together. And I want to explore that just a little bit because that will help you to decide whether or not, and I'm going to focus on the or not, that this is a good time to purchase these stocks, or should you wait? The whole idea, though, when we're buying stocks, when I'm making recommendations to clients about buying stocks, I'm not really telling them this is a stock that you should buy for a week or a month or a year. Generally, it's going to be a full market cycle, which is probably going to be about 4 to 5 years. The best opportunity for profits is going to be within 2 market cycles, and that's going to be basically about 8 to 10 years from that standpoint. So the whole idea is looking at long term and trying to keep in mind how investments will work to your advantage. Now, remember, when you're talking about investing for retirement, there's really just 3 different reasons that people invest in stocks for retirement. One is going to be diversification. And I really haven't talked about diversification in the way that I'm thinking of it in the past. But this is the idea. Okay, you think of diversification, that means the old adage of you don't want to have all your eggs in one basket, because if you drop the basket, then you don't want to have all of those eggs. All of those investments are going to go down from that standpoint. Diversification also comes into mind when I'm talking to people about how they see investments fitting into their life, into their portfolio. I'm going to tell you a short little story about a client that I had in the past. Regretfully, she's passed away now, but she used to go, and she was a wonderful lady. I'll call her Miss Elizabeth. Remember, in the South, here in Texas and some of the southern states, they always refer to a lady as Miss. Nothing bad against that gender. If you want to know why, go watch the movie from 1989 with Morgan Freeman called Driving Miss Daisy. Okay, so we'll talk about Miss Elizabeth. Miss Elizabeth used to love to trade stocks, believe it or not. She was 80 years old. If you're in your 20s or in your 30s and you're thinking, wow, somebody in their 80s trading stocks, yes, she did. And she was not an expert by far. Her husband had left her quite a bit of money. He was an attorney and left her quite a bit of money. And I helped her to invest that money into different types of tax-free bonds. But I didn't and still don't make recommendations for people to do swing trading or day trading. And at the time, she utilized a discount broker, and she would call them up and make different trades. She'd go out and play tennis a couple of times a week, and she would come back and she would make some trades. She'd call up her broker and say, hey, I want to buy this particular stock, or I want to sell this stock. I think that's fine. In my opinion, that type of diversification of assets is okay. It's something respects, it's a little bit of entertainment. I know that some of you that are out there that are stuck in your house because of COVID quarantines, I think you've probably been doing that. But let me tell you a little bit more about that story with Miss Elizabeth. One of the things that happened is I noticed that she started to take larger withdrawals out of her main account. And I called her up and asked her because she was making quite a few requests for larger withdrawals. And she told me what she was doing was no problem with that. But the point was she was drawing down from her principal, and it was reducing her income. In other words, she was basically just taking away what was going to be paying her income many years down the road. So we had a conversation, and then she liked trading stocks. So what we did is we basically set up an account and said, okay, we're going to have this much money in this account. And if you want to trade from this account, that's great. It's kind of like going to a poker table and you have whatever amount of money that's in your pocket. That's all that you're going to trade. And with her, She had a particular amount of money that was set aside into an account, and that was her trading money. And if she wanted to trade stocks, she would utilize that. Now, I've heard Dave Portnoy talk about this, and I agree with him on it. When you're trading, let's say, for example, if you're trading day trading, or you're doing swing trades, generally speaking, you don't want to put any more money out there than you can lose. Now, the type of investing that I'm talking to you about, though, is not that. I'm talking about longer term investing. And this is a strategy where that you will set aside money that's going to be concrete for the future. And the way that you do that is by trying to identify good stocks for the long term. So what I'm going to do today is I'm going to talk to you about what's going on with Xilinx and what's also going on with AMD. And I'm going to talk to you about the possibilities that's in there. Yes, there are some possibilities for some short-term profits, but please don't focus on those so much that you go out and basically invest everything you have in that. They are a good opportunity for diversification. There's a good opportunity for a little bit of short-term profit. Some of it's already been taken up, and I want to get into that from that standpoint. So without further delay, let's go ahead and get into the NASDAQ stock analysis. Remember, if you like the show, come back and subscribe. If you're on Facebook, hit the like button. If you're on Twitter, hit the heart button, whatever that would be. If you're on YouTube, hit the subscribe and the little bell, and you can get notified when things come up. All right, so we're going to talk about Xilinx and AMD. And I want to talk to you just a little bit about how this is coming about, because as we've gone through the day, Xilinx has actually increased close to 14%. Now, when the Wall Street Journal came out and they reported on this possible acquisition by AMD, they said that the market value of Xilinx was about $26 million. And they proposed that, they thought that it would possibly sell at about 30. Did I say million? I meant 26 billion. Excuse me, get the right numbers in there. $26 billion. Well, they thought that it would probably come down at about 30 billion. Morningstar says that it's probably going to be closer to 34 billion. Now, the thing is, when market started out, the company was worth probably about 26 billion. By the time the day ended, they were worth about 28 billion. So the whole idea is, as news hits the market, it's going to get absorbed and it's going to be acted on from that standpoint. And this whole thing is called the efficient market hypothesis. And we're going to talk about that just a little bit. But I want you to understand more about what, I'm going to make this a little bit bigger for you. I want you to understand a little bit more about what Xilinx does and why they are possibly popular and what they bring to the table with AMD. This is just a short little video that I prepared to give you a little bit of an idea. So watch this with me. The whole thing that makes it so attractive to AMD, that makes Xilinx attractive, is the fact that they have a technology where the chips are actually programmable. And you saw that referenced in the video in itself. And that is a big deal when it comes to chips. Now, I'm no expert by far, but I think this will give you a little bit of an idea of how it works. Now, you notice today I put down that the price was, the capitalization of the company was $29.5 billion. And I put down that that was at 115. Well, it's probably higher than that now because it actually ended up 14% for the day. So for some of you, you may have missed it. There may be some more opportunity in there, but I just don't know. I want to explain it to you this way. There's a thought out there that's called the efficient market hypothesis. And basically what that is, it says that current stock prices incorporate all the public information that's available about a company. By the time it hits the wires, by the time it hits the news, it's too late to buy it. So if some of you out there are thinking, I'm going to go out and I'm going to buy Xilinx, you may be too late. Okay, from that standpoint, but you have to understand who's going to be right on the actual valuation. Nobody knows. The companies are still in talks, and we don't know when this is going to happen. Generally speaking, once they file with the SEC for a acquisition or for the federal regulators from that standpoint, it takes them about 30 to 90 days, something like that, for all this to come down. So there could be a lot of give and take in the actual prices that's in there. There's also probably going to be something like that's going on with Maxim Integrated, where some people who are owning Maxim Integrated weren't happy. They went out, they hired lawyers to sue so they could get more. That's a possibility that could happen also when we're looking at this merger that's going to go on between Xilinx and AMD. Now, the whole thing, though, is it's based on the price. Let's take a look and see what's going on right now in the price. A year ago, Xilinx was $89.02 and a little bit more. It ended today at 120.94. So we go a whole year with 35.85%. Now you think that's great? Wait till you get to AMD. AMD has had an even better year from that standpoint. Let's go back. Oh, before I forget about it, remember the past performance of these things is not going to be a guarantee of the future results. So please don't buy it based on my recommendations. I'm not recommending it. I'm reporting on it for you. 5 years ago, this stock was trading at $40.59 and an edge. As I mentioned, it closed at 120.94. So the total increase in 5 years is 197.93%. That is an astounding APR of 24.4. The big question is it going to continue to go up? One good thing that was reported by Morningstar is that the gross margins for Xilinx for their chips is about 70%. That's amazing. If you had a business and you had a 70% gross margin, wow, congratulations. The operating margin is about 20% too. If we look at some of the other key aspects that would be thinking of what's going to be going on in the future with Xilinx and what are they going to bring to AMD, they have a lot of influence on data centers, 5G infrastructure, and automotive. There's a lot of companies out there that are keying in on automotive. Now, AMD, we're going to go into that just a little bit too, but AMD has had an amazing year. They ended 2018 with a balance sheet of $1.1 billion. It increased by the second quarter of 2020 to $1.8 billion. Amazing. Here's another good thing that ended up happening. By Q2 this year, they only had about $690 million in debt, and that was improved upon from $1.25 billion. So I'd say that AMD was doing the baby steps of Dave Ramsey and getting things paid down from that standpoint. Now, this possible deal, Wall Street Journal has said that it's about $30 billion in value. Morningstar saying it's about 34. If you go based off of what Morningstar is saying, it possibly could have a little bit more growth in the stock value in itself, but you got to be careful from that standpoint. Let's take a look at the earnings. Now, this is the earnings for Xilinx. They've kind of been rocky here and there. They've gone over top of what their estimates are pretty regularly. In 2019, they were under just a little bit. So you have to be careful from that standpoint. When we look at the positives of what's going to be going on, possibly with Xilinx, that FPGA technology, the programmable chips, those chips are extremely flexible, and that's the biggest attraction right now that Xilinx has. They're more flexible. They're programmable on the fly, so to speak. That brings a lot to making 4G and 5G even better. And as transistors get smaller, the FPGAs will get smaller too. And you have to understand that these chips that these semiconductors that are made by Xilinx, they're a little bit bigger than what your traditional non-programmable chips are. And if we follow Moore's law basically says that the density of the chip is going to basically double every 2 years. I think it's every 2 years. Don't quote me on that. It's just going to get smaller. A couple of negatives that you have to keep in mind, though, is, hey, Intel acquired Altera, and Altera does the same thing as Xilinx. So Intel is much larger, and they're a big competitor. The defense, aerospace, and telecom industries utilize these programmable chips a great deal, but those industries are, well, they're kind of cyclical. Let's say with defense, if we keep Donald Trump in office, then he's probably going to put more money into the military and aerospace. Joe Biden might not. So that could have some negative impact on it from that standpoint. Now, telecom, we're going to talk about in just a little bit. Xilinx revenue, as we just went through a few minutes ago, has been a little bit sketchy too. Now, here's something that's probably going to change. Now, look, I love dividends. I really, really do, because they're great. Dividends are wonderful, but let me tell you what. Here's the big rub that's going on with AMD and Xilinx. Xilinx has a dividend of 1.43%. Guess how much AMD's is? Can you see that? 0. So since AMD is actually acquiring Xilinx, I would, if my tea leaves are right, I would say that they're probably not going to have a dividend. But that could possibly change too, because let me tell you what, if we have a change of administrations from Republican to Democrat, you could see more companies paying dividends, because the proposal by Biden is that we'll go from a 21% corporate tax to a 28% corporate tax. If you retain money, that's what you have to pay the taxes on. If you pay out dividends to shareholders, you don't have to pay the taxes. The shareholders have to pay that. So that could possibly work to the benefit of a higher taxes, and I think they're going to be trying to do what they can to decrease that. Let's take a look and see how this company competes, because remember that three-legged stool that we put in place in analyzing a stock? We have to look at earnings, we have to look at competitiveness, and we have to look at stability. Let's look at competitiveness. Wow, I don't even have to show you which the companies are. When you look at the spaghetti graph, guess which company is in red? Well, it should be in red. Xilinx is. I put it in blue. Stupid me. AMD is right there too. All righty. Intel is in green. My color's got a little off today. Maybe it was my, who knows, color blindness. Xilinx is actually the one that is in red. Okay, so if we take a look at it from that standpoint, AMD is going to be, if you can follow along and see this here, AMD is the one that is going to be in red. All right, that's good. All right, I don't want to confuse you too much. Confuse myself. Okay, but the whole idea too is we want to look at whether these are growth companies or whether that they are value companies too. What's that make a difference? Well, there's a study that was done recently by the Bank of America Global Research, and basically what they're saying is that if we go from a 21% corporate tax to a 28% corporate tax, that's going to reduce communication services revenues by more than 10%. So what's that mean? That means this is going to be the impact on the bottom line that a Biden tax proposal is going to have. So just keep that in mind from that standpoint. Now, the moat, remember, the moat is going to be that barrier that stands in between the company and their competitors. Really, this is what a moat does. Remember, a moat is going to be that imaginary barrier that's between the company, Xilinx, that we're talking about, and their competitors. And generally, at this point in time, we're probably going to be talking more about Intel. That's going to be the big competitor right now. Texas Instruments some, but Intel, with their acquisition of Altera, is probably going to be more of a competitor from that standpoint. Now, it's interesting, when we talk about AMD in a few moments, AMD really doesn't even have a moat. But with the moat that's there right now for Xilinx is their intangible assets. There's programmable chips, their proprietary property. The switching cost is also much bigger for programmable chips because when you have a manufacturer, let's say, for example, that you have a self-driving car, and that self-driving car is using the programmable chips. They've been integrated into that car, and the switching cost is just not the cost of the chip, which is minor in comparison to the entire car. The manufacturer of the car, if it's a self-driving car, let's say, for example, it's a Tesla. And Tesla doesn't want to have any bad press because they're self-driving cars running into people. And that's part of the tolerance that they have become accustomed to in using a particular type of chip. So that's part of the switching cost to keep in mind too. Plus also Xilinx has a very unique expertise, if there is a degree of uniqueness, and some people tell me there's not. And also those programmable chips, the FPGAs, there's a lot of different applications for that. So keep that in mind too. Let's take a look and see what Morningstar says about Xilinx. Of course, we saw that it closed today up at 120.94, but the fair market value that Morningstar is putting on this stock is only $90. Now, what's that mean? The way that Morningstar does this, it varies for different companies. And the reason that it varies is because they look at, let's say, for example, earnings per share or EBITDA, or earnings per share with the amortization and the taxes. They look at the earnings per share and they take a multiple of those earnings, and that's how they come up with the fair market value. Sometimes they'll use sales, sometimes they'll use other different types of factors, but generally speaking, they're going to use earnings per share. So they're saying right now that it's $90 per share. That's saying that it's about 34% overpriced. So it's only a 2-star fund. Remember, the Morningstar rating is different with mutual funds as opposed to with stocks. With mutual funds, it actually does have something to do with the quality of the fund, et cetera, et cetera. But when we're talking about stocks, what it only has to do with is the value, the fair market value. You're going to have funds if they are not funds. You're going to have stocks if the stocks are considered to be value funds or value stocks oriented, and they're going to be low price compared to their fair market value. You're going to have maybe 4 or 5 stars. If you have stocks that have high valuations like a Tesla or an Apple, and they're far over top of what the fair market value, they're only going to give those companies maybe 1 star. So in this respects, they gave them 2 stars, which is not too bad. All right, let's take a look and see. Let me make this just a little bit bigger for you so you can see. This is what the analysts are saying. And I usually put this up here just a little bit differently, but we'll go with it now. Out of the 16 analysts that were polled, we saw that 3 are saying that Xilinx is a strong buy. 10 are going to say that this is going to be a hold. So the average really is going to come out to be a hold from that standpoint. All right, so let's get into talking a little bit more about AMD. Okay, we talked about what Xilinx does, but AMD is really the one that's coming to the table with all the money. Where did it all come from? All right, watch this with me and you'll get an idea. Now, AMD, it's kind of interesting. They ended down the day about 4%. We're on the other end of the spectrum. Xilinx, the company that they're actually buying, went up in value. So that's kind of interesting from that standpoint, but they're still worth about $97.2 billion right before the close. So that was it from that standpoint. If we look back over the past year, okay, hold on to yourself and make sure you're sitting down when you look at this, because this is just going to make your head spin. Last year, they were trading at $28.46 a share. Today, $83.10. That's an amazing 191.99%. So the big question is, can AMD continue growing? And what is the acquisition of Xilinx going to actually do to this? Let me take a look with you at what happened over the past 5 years, because their history has been kind of interesting. if you think that those returns were head spinning, wait till you see this. If you could have been in Doc and Marty's time machine in the DeLorean and went back 5 years and bought AMD in 2015, you could have got it for $1.96 per share. It increased a whopping 413.98%, 111.58 APR. Wow. That's just amazing to me. Yes, the past performance is no guarantee of a future result. Lightning would have to strike 1,000,000 times for this to happen again. I told you this before, but keep this in mind because they don't have a dividend and they're probably not going to have a dividend. And that could change if they have corporate taxes go up. But right now, they don't have a dividend. So if you're buying Xilinx because of dividends, it's probably not going to stick around. Earnings is where everything has come from, and AMD has done outstanding when it comes to earnings. Yeah, when we had the coronavirus market crash begin in 2020, their earnings went down, but they've met their expectations almost every year. I show you this again because the corporate tax is going to have an effect on the valuation of this going forward. Okay, here's the interesting thing. This company, AMD, has no moat. That means there's no barrier out there. They just basically have been doing very good in their sales. They specialize in low-end chips, but the low-end chips are very vulnerable to competition. What's really interesting, too, is they don't own their own manufacturing. They basically use or lease or rent somebody else's manufacturing, where Intel and Texas Instruments and many other companies actually own their own manufacturing. So the sustainability of these returns going forward is quite questionable, but let's look at some of the positives, really. Their recent CPU and GPU chips have actually been better than Intel's and NVIDIA's. They've been very, very popular with cryptocurrency miners. The GPU, which are a little bit more advanced than the CPU, they're popular because, remember, to be a cryptocurrency miner, you have to have a lot of computing power to keep going on. The other thing is, still, we've talked about this if we've gone along, so this is nothing new. The Xilinx acquisition could improve the competitiveness. Now, on the negative side, you got to look at it from the standpoint that Intel is still the mega company when it comes to chips. NVIDIA actually has better GPU technology, so we have to see how that's going to work out. Let's look and see what Morningstar actually says. We know that they ended the day 83.10. The fair market value is quite low in comparison. It's a $31 fair market value, and this is actually from Morningstar. So what Morningstar is saying is that this stock is really highly overvalued. Now, with that said, you would probably think that most analysts are going to do the same thing that they were doing with Xilinx. They're going to say, no, we're going to hold off on this because it's too overvalued. Haha, surprise, surprise. Wait until you see this. With 24 analysts that were polled, 13 said that this is still a strong buy, and 11 of them said that it's a hold. So the average for it is this. So it's a moderate buy. It's not a strong buy. It's a moderate buy, which is not too bad from that standpoint. It actually surprised me. I thought that it would be flip-flopped. And, the thing is, what we're seeing is the valuation go down in the market right now with AMD because they're going to probably be taking their stock and trading it for Xilinx. They've got a lot of cash, but that's not going to be, they don't have $30 billion worth of cash or $34 billion, depending on who you listen to. But they have enough that they could basically buy it with stock from that standpoint because they have enough corporate stock. All right. So I want to remind you, too, that this is not a buy-sell recommendation. This is basically me reporting. The only way that you can get a recommendation from me is to go to my website at richardfinancialplanning.com and set up a time to talk to me. Now, I remind you because some people from far-off lands have wanted consultations, and I really only do personal consultations in Texas. You can use my information. It's up to you to how you use it. It's the kind of buyer beware thing. But if you want to talk to me specifically, you have to go to my website at richardsfinancialplanning.com, and then you can find a time from that standpoint. So I want to remind you that if you have questions about any of this different stuff, enter them into the platform even after today's show is over. I'm glad to answer any questions that you have, whether that you're in Texas or in Europe or Asia or wherever you are, because I do have people that send me questions from all over the world, which is kind of interesting from that standpoint. A lot of people want to know about the domestic stock market here in the United States, and I'm glad to give you information. Okay, so Monday is Columbus Day, or if you're calling it Indigenous Persons Day. I grew up with Columbus Day, so it's Columbus Day. But I will still be working since the markets are open. So I hope that y'all have a really good weekend. And remember to subscribe. Let me know how things are going. If you just tuned in, go back and replay things, because you can hear all the information about Xilinx and about AMD. You can also go over to my YouTube channel. It's not, you can't find it that easily right now. It's under Richards Financial Planning, but you can find it by going to my website, which is richardsfinancialplanning.com. Go all the way down to the bottom. I call that the junk drawer. That's the Donald Miller reference. Go all the way down to the junk drawer, and you will see YouTube channel connection. And you can click on that, and it'll get you over to YouTube. Or you can go to Facebook, or you can look at it on Periscope. Periscope has some replay issues. I'm not sure why, but Facebook and YouTube are definitely two that you can look at. Before I go, I'll take a look and see what kind of thoughts we have going on. Says, hi there. What do you think about call options for October 23rd? You know, I really don't get into the call options that much from this standpoint. I think that, I mean, that's a pretty general question for AMD. I think that we're possibly going to see some more devaluation, if that gives you a little bit of insight from that standpoint. I think that we're probably going to see more increase in value currently from Xilinx, because if you basically go off of what the experts are reporting, they're saying that the valuation of Xilinx is probably going to be $30 to $34 billion. Keep wanting to use that M word in there. The whole idea is going to be that as that moves forward, that affects what the share price is going to do. We saw that happen today when we saw the price of Xilinx go up about 14%. We also saw AMD go down. Now, October 23rd is kind of out there from that standpoint. And this is a long process. Remember that when we talk about an acquisition like this, they're just in talks. They could basically break everything off. And if you had an option for October 23rd, it could basically be worthless at that point. So you have to look at it. I think that they need to, you know, before I would commit to anything like that, I want to make sure that they're actually going to do a merger. When things get ready, if it sounds more like, yes, they're going to file the paperwork with the federal government, I don't think there will be any type of difficulties from the government regulators. But when they get to that point, I think that you've got a little bit more certainty. Of course, you don't make as much money, but it all depends on how it works. Okay. You're very welcome. If you have any other thoughts about that, let me know. I want to know what you can do. Come back and tell me how it works out from that standpoint. Okay, without further ado, I'm going to say have a really good weekend. Stick around for the disclosure, because remember, the past performance is not a guarantee of future results. Have a great weekend.